You're listening to Real Talk Texas on 570 KLIF News and Information. Now, live in studio, your host, local real estate expert Steve Hakes.
This morning, I'm honored to share with you the Real Estate Radio Network's one and only CEO and co-founder, Ron Quintero, hailing from Real Estate Radio Network corporate headquarters in sunny San Diego. Good morning, Ron. Hope your Sunday's off to a fantastic start.
Yeah, I'm excited about being on your show today, and this being your inaugural show and kicking it off there in Dallas, I'm excited about it.
Great. I really appreciate you being here, Ron. Hey, Ron, without a full autobiography, because we don't have a lot of time here today, just kidding, but on a serious note, what happened in your past career, ventures, personal goals? What led you to build the Real Estate Radio Network?
You know, about 3.5 years ago, we just got tired of looking at the television in the evening news and listening to the talking heads, as we call them, and also a lot of the radio shows that were nationally syndicated that were getting the information wrong. They were talking about, home prices are down, foreclosures are up. If it wasn't bad news, it wasn't news at all. And we kept listening to some of these inaccurate reports that were being broadcast on a national basis, and I said, it's just not that way, particularly there in Texas. You guys have some very conservative lending laws that you don't allow people to extract more than 80% of their equity. So, the craziness that was going on, as an example, in Las Vegas or Phoenix or some of these other, California, where I'm born and raised, we went crazy. We abused the right to borrow money, and we borrowed probably more than we should, and we refinanced and took out home loans that really should have never been put on the books in the first place. So there in Texas, you guys don't experience the same, radical high levels of appreciation that we do, nor do you experience the falls off the cliff in terms of property values plummeting. And so we wanted to empower local professionals like yourself, people that have been in the trenches, that are working with real estate professionals on a daily basis, to be able to deliver the timely truths to what's really happening within the local markets, and not listening to the talking heads on the evening news, and not listening to the nationally syndicated radio shows trying to deliver this broad spectrum of what's going on in the housing market. And Steve, you know this. If it's not bad news, it's probably not news at all. I mean, if it's not shocking people, it doesn't make the news. Good news doesn't sell. I hate to say that, but it really doesn't. So we wanted to be able to develop a network of local professionals like yourself to be able to interview other local professionals, to be able to talk about the timely truths about what's happening with mortgages, with real estate trends, with credit, protecting your assets, information that consumers need to make informed and accurate decisions, Steve.
Yeah, and I agree with you 100%, Ron. It just seems like in Texas here, I'm hearing great news from real estate agents that the market's picked up, prices picked up. People I know at Fannie Mae are telling me that values are picking up on the REO product that they have. We just really didn't run into as deep of a decline in values as you hear on the national news. And I think it's really important that we get that message out that, hey, it's really a great time. There's never really been a better time than right now to buy real estate.
Particularly with interest rates as low as they are, with the cost of the true cost of home ownership over time, not necessarily the price that you pay for the property, the true cost. And if you're financing, like over 95% of people that buy real estate, your first home, the cost of the loan, it long term is far more important than the price you pay. And a lot of people really don't get into the nitty gritty of knowing the numbers behind the numbers. And I know that you're a numbers guy. So, here we are broadcasting, on a weekend show. What do you do Monday through Friday?
Well, I'm in the mortgage business, of course, and I'm the national sales director for Affiliated Bank Mortgage. And what we do is just what you said. I mean, most people will talk about mortgages and they'll quote you a rate and a price, and they really don't spend the time to figure out what's best for you and your family. And that's really what I enjoy the most. And that is really sitting someone down. And when we send out a quote, we just don't send out a sheet that says, here's your rate, your fees, and here's your payment. We actually give you choices. We give you a graphical view of what those choices might mean down the road. We talk to you about where do you want to be in 5 years and things like that. I mean, one of the biggest things I do with my kids are all getting of the age where they're starting to buy their first home. And one of the things I really preach to them is, you've only got 3.5% down on an FHA or 5% down for a Fannie Mae loan is, you should be looking at a 15-year mortgage, because what I do is I run the amortization chart and show them that in 5 years they've got to pay a real estate agent to market their home and help them sell their home. That costs a fee. But if you're going to do that and you don't have any equity in your house, you may have to pay to get out of your current home. And people don't realize that if they just call someone that's just going to give them a quick rate and a fee quote.
Wait a minute. Let's break that down for a minute, Steve. The fatherly advice is kind of what I just heard you say, is that the same advice that you would give your kids, you want to be able to give your clients in terms of taking on a little bit more of an aggressive payment, but more importantly, again, knowing the numbers behind the numbers. If you calculate when a payment is made on a 15-year mortgage versus a 30-year mortgage, the percentage of the payment that's allocated towards the principal reduction or the building of equity in the property, how much that process is accelerated with a 15-year. And by the way, I think that's great fatherly advice, because if you're able to tell these kids when they're in their peak income earning years, or as they're climbing that corporate ladder, they're just beginning their career path, and hopefully as they progress, so's their pay, so's their compensation. They're going to be moving up that ladder. They should be able to take on a more aggressive payment. And how great would it be if you're age 25 to be able to have your property free and clear at age 40?
That's right. And Ron, we've got a couple minutes here to go to a break. But, really that's one of the things that I really think as a mortgage professional, you're obligated to help people look at their total financial picture, not just their mortgage. The mortgage is one of the biggest part of your financial portfolio and really can dictate where you're going to be when you're ready to make your next move or grow your family or anything like that. So you've really got to take the time, slow down and look at it. I mean, you were talking about, stretching on your mortgage payment a little bit. I even preach, well, if you can't afford the 15-year payment and you're putting so little down, then you really might want to look at a smaller house.
Yeah, absolutely. You do not want to be house rich and cash poor. And I see a lot of people that end up stretching to how much home they could actually afford. I know we're going to go to break in about a minute or two here, but Steve, when we get back, I'd love to be able to have you drill down a little bit on your bank and some of the things that you're doing. I don't want to turn this into a big infomercial, but I do want to be able to make people aware of the various loan programs, because, the evening news talks about lenders aren't lending money, and we know that to not be true. We also know that lenders are lending money beyond just home loans. You guys are doing some aggressive SBA loans and small business administration. You guys are working on all kinds of different programs to be able to get money infused into the marketplace to be able to help our economy overall recover.
You're absolutely right, Ron. We're really happy to have you here on the station this morning, and we're going to take a commercial break right now.